most successful startups, at least in the early years, need at least 2 co-founders. Because this journey is very lonely. It can shake you up a lot. It means that it's better to go along with it with someone that you trust or are able to build trust and respect with, which means 99% of the people who are graduating out of college should not become founders because they don't have the network, they don't have the experiences. They have a lot of raw passion and no dependencies, which is good. We actually launched 2003 exactly when Mark Zuckerberg was building Facebook, and of course we didn't know of it then. We actually built an entire campus intranet where students could interact with each other, raise an amount of capital where you're scaling fast, but at the same time not doing stupid mistakes. At the end of the day, the founder does the work. The founder is really the director of the movie, and I would say the VCs are producers. They can have some budgets on what needs to be done. The first step is to really get the hell out, send the resignation letter to your boss, and then start up. Because when you moonlight, the fire is still not in your pants. Any person who wants to become a founder, whether it's a product manager, whether it's an engineer, it doesn't matter. I think the joy of creation, the joy of legacy, the joy of seeing people use something that you build has to be there. If you are very keen on building a large business, a very scalable technology or a platform, what might look uncool, unsexy at the start might actually make a lot of sense. The moment you shift your thought process from a career path to a career map, where different places have different things which are beautiful and unique, you then completely reset. You will be able to start up, you will be able to take that jump, and you will be able to have a beautiful journey through it.
Hey, hi, this is Arnav. Welcome to yet another episode of SCALER Pod. And today we have with us an interesting guest, Rajiv. Hi, welcome here.
Thanks, Arnav. Thanks for having me.
Yeah. So usually we often have people who are right now hardcore working on tech. You have somebody who has done that before, but I think somebody who is an active venture capitalist. This is the first time I'm having somebody on the show. So I have a bunch of interesting questions for you.
Thank you so much, because I do know that I'm not actively building tech, but if there was one big regret in my life from 20 years back is the day I stopped coding, right? I don't usually have regrets, but that's the only thing that I can say in my favor to be here.
Right. I'll definitely delve into like how this journey happened and all of that. I'll start off with my favorite question that I start off with all my guests, and especially because I get a lot of different answers. Somebody at an early stage startup, somebody at a late, somebody on a sabbatical, different answers. So what does your day in your life at work look like? What does a VC do?
What does a
What's your
VC
work
do?
day?
See, the one thing I've realized is the more you move towards leadership, I think pretty much everyone's time in a week, I will say, because in a day it's very difficult because you do different stuff across the week. But it's actually spread across 5 things, very simplistically. Now, whether you're a founder, whether you're a VC, whether you're a business leader, I think it's the broad same mix. First is everything with respect to your customers, right? Which is in the case of VCs, that's founders. Right. And in the case of, let's say, someone running a business like SCALER, maybe that's engineers. And, in the e-commerce space, it's probably, people who are buying your stuff. So spending time with customers is something that's critical for everyone. Now, in our business, of course, sometimes it is to help founders, sometimes it is to assess founders, sometimes it's to pitch to founders. So that's one big part of where I spend time. Second is capital, because obviously every business runs on money, and whether that's to get revenues or to get investment into Antler itself, in some form or the other, you will, as a leader, spend time, quote unquote, raising money or getting revenues, right? Managing a sales function. And of course, if you're an engineer, maybe 10 years back, 15 years back, when I was just, at the start of my career, let's say, I didn't have to worry about revenue. Someone else was going to, but as a leader, you will have to. Right. The third aspect, I would say, is everything with respect to the team. Now, either you're building your team, you're managing your team, you're reviewing your team, and, it could be an engineering team, which is 50 people, or it could be a VC team where that's 15, 20 people. But at the end of the day, everything related to people is a huge aspect of building any great business.
Right.
The fourth aspect is everything around making sure that the brand and or the product that you're selling is being built right? Which means that looking at metrics, making sure that you're aware of what needs to go in, getting the best of stuff to make sure that, for example, we see, at least at the very early stages, you have to build a very strong brand to be able to attract great founders. Right. And a lot of our effort goes into that. Or it might be something around making something a platform or making something a product which helps some of our portfolio companies, right? So brand and product, I would say, is fourth. The last one is just being out there in the ecosystem in terms of networking, in terms of learning from people, in terms of press, in terms of variety of stuff that as a leader you'll have to do. And it's no different for our business, because you will establish connections today which might help you, or which you might be helpful to a year down the line or 3 years down the line. So you are always in the mode of meeting the ecosystem, going to some event, all of that stuff. But at the end of the day, that's also the time when you spend for yourself to increase your knowledge on the field that you're operating in, because you don't want to be left behind. Especially a field like early stage VC is extremely competitive, is very, very crowded at some level, and there's a lot of action happening almost every day. So you're also sort of sprucing up your own knowledge. And very funnily, I've observed that while there may be a week where one of these spike up, let's say 1 week where there's a lot of capital conversations, 1 week where there's a bunch of events we're doing with founders, 1 week where there's a bunch of stuff that we have to do with press, whatever it is. But in a normal week, there is an equal split across all of these 5 aspects.
Balance between.
And the other thing I've realized is, even when I was a founder, there was an reasonable split across these 4-5 aspects only. It's just that the context was an e-commerce business with Urban Ladder, and now it's a VC quote-unquote business with Antler.
Right.
But of course, if you're an individual performer, then some of these skews are much lesser.
Right.
But as you move higher and higher in an organization towards a leadership role, this is pretty much the split for any person.
Right. No, that's definitely makes sense. And I think over a long period of time, you look, it's probably the same amount of energy you put in.
Yeah.
Some days fires are there on some side of it. Yeah.
Correct.
Nice. So one of the things I really wanted to bring you here to talk about is how engineers can get into entrepreneurship. About VCs, I have a lot of questions. But before that, I would like to obviously let the audience also know a little bit about you. How has the journey been so far? Like from tech, running companies, now running a VC. How has it all been?
So for me, the fascination of a computer started exactly 30 years ago. Okay. So I was in my 30 years back. It's a long time back. A lot of people probably listening to your podcast were probably not even born. But 30 years back, when I first touched the computer, it was like it's one of those feelings, right, that this is something. And 1994, I finished my 10th grade, and I got into computer science in my 11th grade. And just the joy, and a lot of people spend summer vacations playing cricket. I also did that, but I also started coding, right? Even before I actually officially started learning. Today, people are learning computers in age 3 and age 4, I don't know when, but at least at that time, to even learn computers was more 11th grade thing. That's when you start. And I think over the years, as I went to IIT Madras, one of the things that always fascinated me was creating stuff. So I would say my first quote-unquote app or entrepreneurial thing happened in, I would say, 1997, 98, let's say 25 years back. I actually created an Indian version of this game called Carmen Sandiego. I don't know if you've heard. Where in the world is Carmen Sandiego is one of the most famous old detective games. Anyone who used a computer in the 1990s would know of this game. Today it's a Netflix series. And what I did was, it was actually a detective game where you had to guess where the thief was going next. And I built an India version of it, which means that, if the detective goes to Agra, you'll get a clue that, thief is somewhere near Taj Mahal or something like that, right? So you had to guess where the thief was going next and find the thief. It was actually a very visual interface.
Thing, like
it was built in Visual Basic. It was built in Visual Basic.
Okay.
And it was a graphical thing. And what I saw the first time when I put it on my campus network, and this was the time when, you didn't have fancy websites and stuff. You still had to access the internet through a phone dial-up. And I just saw a lot of people spend so much time on that app, right? And I just loved coding. And I got on, through IIT, joined Infosys, where I again loved coding. It was a huge batch. And of course, when you're moving from building something for consumers to building something for enterprise, you sort of also learn a bunch of other stuff around how to build very enterprise scale, products. I think through the Infosys journey, one thing which is I built the largest personal website within Infosys. I was in Chennai, Infosys, and I used to have a daily active users of 1,500 to 2,000 users hitting my website. It was such a cause of concern for Chennai Infosys, the network, that they said, client business is getting hit because people from Bangalore are accessing your website, right? So I had to literally shut down the
your
website.
Internal personal website.
Because it was a personal website where there was music, there was wallpapers, there was downloads. People could actually build a playlist and stuff. And I had coded all of it, right? So there was just this joy of seeing people use something you built.
Yeah.
And I would say that's probably if there was the first real thing that I would say that any person who wants to become a founder, whether it's a product manager, whether it's an engineer, it doesn't matter. I think the joy of creation, the joy of legacy, the joy of seeing people use something that you build has to be there, right? Otherwise, you'll not enjoy the founder journey, right? And so for me, it started then, which was almost 20 years back. And I was known, and even today, some of the people who have been in Infosys for 20, 25 years still know of that website more than anything else, right? I moved on to IIM Bangalore, and that's where I think I hit the right notes. That's where I unfortunately stopped coding, because the moment you do an MBA, you sort of move on to other more product and business stuff. But I think the good part for me was I also continued, and even in IIM Bangalore, I built the entire intranet, which stood for 10 years right after I passed out. And a lot of people would use it every day, would give feedback. This was the time when Facebook had not yet come, so we actually launched 2003, exactly when Mark Zuckerberg was building Facebook, and of course we didn't know of it then. We actually built an entire campus intranet where students could interact with each other, they could chat with each other. We didn't have the concept of a news feed, but I think all of it, the reason why I'm saying with a bit more stress is, I think the joy of creation, the joy of people using what you build, is something that inherently was there for me the days that I coded and the days that I was an engineer. Of course, 10 years after doing that and moving to product and business, I moved on to Cognizant right after my MBA. And then Cognizant, the focus was more enterprise product management and enterprise business analysis, where you're understanding what the client wants and translating and getting it done from the engineers. Sometimes I would feel so irritated that, okay, it's not being built the way that I would have built it. But unfortunately, that was my role. And as I moved more from engineering to product, which is a shift that a lot of engineers also do, right? And even without the MBA, right? Some work on very technical products, some work on enterprise products, some work on platform products, some work on consumer products. So I would say that was a big shift in Cognizant. But my heart was always in the internet, because that's where I had built a lot of websites. I wanted to see people use what I built very, very quickly, right? So 2008, I think I had a great run at Cognizant. I learned a lot, but I figured that it was the time to move to the internet world, move to Yahoo. That's when I moved to Bangalore also, from Chennai largely before that. And I think the Yahoo experience of 4 years was phenomenal. Yahoo has produced
Yahoo was
this was a time when,
ahead of the curve in everything.
Yahoo was ahead of the curve in a bunch of things, but Yahoo missed the boat on a bunch of things, right? Especially social and mobile. Yahoo was very slow to react. And I think that sort of culminated in the company not doing very well in that 2010, 11, 12 time period. But I think it was a great place to learn product management. It was a great place to interact with very strong engineers. Yahoo had super strong engineers. And Yahoo had a lot of strong UX also, right? So I would say those 4 years were a huge amount of grounding for me before I decided to make the shift from product manager to founder in 2012 with Urban Ladder. And I think with Urban Ladder, of course, the moment you become a founder, I was the quote-unquote tech founder and Ashish was the business founder. But I also realized that, it had been almost 10 years since I coded, so I needed someone who would code the website, right, and code stuff. So we got someone who was the head of engineering, and I took on a much larger mandate at the start, which is to say I'll take care of all engineering and technology through my VP of engineering. But I'll also look at product, marketing, merchandising, HR, things which I had to learn pretty much from scratch, right? The good part is Urban Ladder, really took off, right? In the first 2 years, 3 years, it was completely a category we had no background to. Right. So we did a lot of stuff because we didn't know what it was. And I think the founder journey through those 7 years of Urban Ladder between 2012 and 2019 was a huge amount of grounding. Because imagine now it's almost like the cat living 9 lives. Now I've started off with computers, moved on to enterprise, then moved on to consumer. Now I'm doing HR and marketing and technology is maybe 40% of what I do. Yeah. And at the end of the Urban Ladder journey, I think it was very clear for me that I love technology. I love working with people because I was also the head of HR. And I love building a brand and getting people together. And this was just around COVID, when I was making a decision on what next, right after Urban Ladder. And this opportunity at Antler just excited me because I said, okay, till 40, I have done so much stuff. From 40 to 50, I need to do something interesting, something different. And this decade, I think, for me, is to really scale up at least the impact in, not just build one company, but be sort of a catalyst and build maybe hundreds of companies which can scale up across so many different sectors, right? The thing that the founder journey also teaches you is you have to be sort of wedded to one space for at least a good 7 to 10 year period. And somewhere I'm being a bit of a jack of all trades and, just liking the space of ideas across a variety of spaces. I felt at least the early stage VC business was something where I could not get bored very fast and see the power of people. And I always love coaching people. I always love sort of interacting with people. This is really a people game at the end of the day, right? You're sort of interacting, engaging with so many founders. And I think that was pretty, I don't know, maybe because it was COVID, maybe it was just serendipitous, maybe because I loved the people behind Antler, but it just worked out in a way that I also wanted to do something more global because a good chunk of my life I had spent in India or doing stuff in India. I said, okay, maybe 40 to 50, work with people, never invested before Antler, try a field such as investing and do this in a global fashion. So that's sort of, in a very long way, a career that spanned everything from engineering all the way to VC.
Nice, nice. The next question I have is a very 101 question, which is, what does a VC do? That's the question. But why I'm asking that, I'll give you background. And that's coming from also, I would say my audience would be watching this podcast is that if you are, let's say, a product manager, you might have a friend who is an analyst at a VC. If you are somebody in media or marketing, you might have friends who are working at a VC. If you are in finance, obviously, you understand the domain. The thing that I know from a lot of my students, my peers, my friends who have spent a bunch of years in engineering space, is that not a lot of people actually know what a VC is like. They're the people holding the money bags, but what is it really, right? I mean, that's the very very basic definition. They think that, okay, they are the people funding the startups, but how do they fund it? Like, if you can give an overview, that would be actually really great.
I'll maybe do a more 101 thing in terms of just taking a step back and understanding as to why you would even need to interact with a VC.
Exactly.
Right? Because maybe I think that's important.
Yeah.
In Urban Ladder, we ended up raising from 4-5 different VCs and ended up raising almost $100 million through our journey, right? And then sometimes you wonder, okay, was that too much money? Did you really need all of the money and stuff? So at a very foundational level, if you want to do something completely independent, right, and if you want to create something independent, you can go do it as a freelancer, okay? You don't need to start a company. You don't need to raise any VC money and stuff. You can be a freelancer and do something independent where you have control of your own time. I would say that's sort of step one of just wanting to do something independent. Now, for someone who wants to create something more than just themselves, right, which is to create an entity, to have people, to work with people, you could very well build a bootstrap businesses. 1990, maybe 98% of businesses, 99% of businesses in this country, which are businesses, are bootstrap businesses, right? Where you start off small, you offer something to someone, you get money from that, you get a profit from it, you reinvest the profit back, you grow that organically. And there are very scaled, bootstrap businesses like Zerodha and Zoho. And there are much smaller bootstrap businesses because that's what the people who created them want. They don't want to scale up. They want to manage a 15-member team, 20-member team. They're happy with what they're doing.
Yeah.
Now, if you really want to build something, in most cases, it's probably going to be a bootstrap business, right? And a lot of people think that VC money is there, so let me go raise, right? Now, let me come to the third bucket, which is really when you have to raise some kind of money from an institution, right? Now, if you look at when do you have to raise money, which is not bootstrap. Now, even within raising money, there are a variety of options to raise money. You can raise money debt. You just borrow money from someone and pay the money back. You don't give them equity for it. You also go do crowdfunding, right? You could, just go say that I'm building this interesting product. And, if you buy this product, you just give me money in advance. So I build it out and then I sell it to you.
Yeah.
The last option beyond all of this is venture capital money and private equity money, right? Now, there are strings attached to this, right? And you should first understand as to how a VC works before. So VCs, right? What VCs do is we take money from other people, which are institutions and big endowments and big institutions, right? This could be, as big as MIT and Harvard's endowments, the money they manage of all of their alumni and, all of their students. Or it could be hospital chains, it could be big institutions, sovereign funds in Dubai and stuff, which are going to give you that money, assuming that you're going to invest a bulk of that money in companies and give them back a very high return.
Right.
Now, where do you have to give them a very high return? Because there's a very high risk in this money associated. Yeah. So if I am managing $1 billion, right, let's say as one of these institutions, I'm going to maybe give 10% of that to VCs. Right, maybe $100 million, I might give it to a Sequoia Capital or some VC which is going to, go invest that money into companies. Now, VCs are very important in the fabric of society because they enable a lot of company creation. And today you have the Ubers and the Swiggies and the Zomatos of the world thanks to VC capital at some level, right? Otherwise, and today you can't live without any of this, right? You can't live without a Uber, you can't live without a Swiggy, right? And so there is a lot of company creation, which is what venture capitalists are supposed to be doing, which would have never existed otherwise, because the assumption is you need very high amounts of capital in the first 5-6 years, and you get to a particular scale in that company where after in the 8-10 years you give them back way higher returns. This was the origin of venture capital, right? Now this originated in the 1960s, and there have been people like Apple and stuff. And the idea with giving that money is, I take money from an endowment, I give it to you as a startup. Now I know, based on the stage at which I invest, out of 10 startups I do, 6 or 7 are not going to return any money because there is a very high failure.
Right.
2 or 3 will return money to an extent of 1 or 2x. Now, you must understand one thing. I'm going to return back as a VC money to my what is called a limited partner LP in a 10-year period. And if I return the money back in a 10-year period, even to give a 15% interest rate over a 10-year period, I need to give back almost a 5x or so. Right? So if I take 100 rupees, I have to give them back 500 rupees in a 10-year period. Otherwise, they would go put the money in a bank and get better interest rate, right? Because it is much less risky, right? Which is why the VC business is almost becomes a treadmill for a founder. So if you raise VC money, I'm going to come and sit on the board because I need you to drive pace. It's not charity money. I'm taking money from someone whom I have to return in an 8 to 10 year period with a 5 to 6x multiplier.
Right.
Now I know statistically that you will also fail, and I'm okay with it because I have a portfolio of 10 companies. For every 5 companies that fail, 3 companies might give me some return, and 1 company will give me a outsized return.
Right.
Which is why there is this huge pressure of raising money more, becoming a unicorn, all of that stuff. Is because that's the way the industry works, right? It's not because of press, it's not because of anything. Because the VC, imagine you raise money from an early stage VC, right? And even VCs, there are different, the later you go, there is more data on the company, so your risk is lesser. So the later you go closer to an IPO stage, it's called private equity and pre-IPO funding. Then there is mid-stage venture capital funding, and very early stage venture capital funding is where Antler fits in, right? It's called pre-seed, where from pre-seed, statistically 90% of the companies will fail, right? Because we are Antler, because we select better, because we help better, all of that stuff. Even our own assumption is 50% of our companies will fail. Right, over the next 2-3 years. But that's the whole point, right? You don't know which of those 50, right?
Let people take the risk.
Let people take the risk, let them show execution, we'll see what product market fit is. So VCs, banks will never give you this money. Customers will never give you this money. So if someone has something which is hyper scalable over a 5-10 year period, uses the power of technology to hyperscale. I mean, we were a D2C business in Urban Ladder, and we ended up raising capital, but we thought we were a technology business. But at the end of the day, we are selling furniture. It's a physical product business. You can't really change supply chain, add designs and stuff too fast, right? So I think you have to be clear on what kind of business you're building. Raise an amount of capital where you're scaling fast, but at the same time not doing stupid mistakes like donating money to Facebook and Google, just increasing the catalog, giving such discounts that are not feasible. And a lot of that bad behavior is what you see when there's a lot of venture capital money, right? In 2021, India had almost 40-50 billion of venture capital, which means that there was just a lot of money coming from LPs to VCs. VCs were just putting it on a lot of companies because they have to deploy it. They can't keep it in the bank because they have to give a return in 10 years. And founders are raising money, thinking, higher valuation means great things. But it's not true, because the higher the valuation in a particular round, to justify your valuation here, your next round has to be 3 to 4x of that. Right. And the next round has to be 3 to 4x of that. So imagine someone who has raised $100 million in the first 2-3 years at almost a $500 million valuation. To give return to that VC who's coming in that round, you have to have a company that's valued at $3 billion. Otherwise, the VC who comes in at that round will not get a 5x return. So you really, as a founder, interact. And that's what the job of the VC is, to work with founders where they see a large market, where they see the potential of technology and a differential customer insight, where they see the potential of execution of the founder to build a big, strong team, excite talent, and really scale up fast. Because at the end of the day, imagine there was nothing today, and in 7 years, you are maybe catering to 100 million customers, or you're having a business that's $100 million in revenue, but you're building it in a way that you're just not using VC money to market. And and that's sort of what happens. Is every cycle has that bad culture also.
Right.
It happened to us when we were building Urban Ladder. We made the same mistake 2014, 15, 16, where we got a lot of money. We just went and marketed. We increased scale like 10x, but our marketing cost shot up 100x. It's the same, right? You make some of these mistakes and you learn. Same thing happened in 2017, 18, 19. Same thing happened in 21, 22. So every cycle, founders make, I would say, bigger mistakes at bigger scale. It's not that the mistakes ever stop, but the job of the VC is to also provide the guardrails to make sure that, hey, we have learned from our past experiences that, hey, you're probably spending too much money on marketing, or you're not hiring the right kind of talent, or you're not scaling up fast enough because there are other people. The thing with VC capital is there's also a lot of capital that goes towards similar problem statements. So you'll have 3-4 people at the same time. Right. So your competition also in a particular space can just completely shoot up very fast. So as a founder, whether you're a tech or a business founder, I think it's important to first realize, do you really want to build a VC scale business?
Right.
Do you want to raise money from VCs? Because that journey is a very different journey. You have to keep 4 or 5 VC partners also at some level abreast of what's happening, pull them into the mix. They are on the board. You must understand it's an institution beyond you as a founder. Because if you want power, if you want control, maybe VC businesses are not the only way or the best way to do. Because imagine, after 4 or 5 rounds of funding from different VCs who all want at least 15% stake in your business, you probably will hold 10%. There'll be another 3-4 VCs who will hold much more than you.
Yeah.
So, of course, if you're doing well, no one wants to come tell you what needs to be done. No one wants to run the business. No VC has the bandwidth to run a business. They really want to interject only when things go wrong.
Right.
Or when there is governance issues, which you would have seen in the last year, right? So I would say the job of the venture capitalist is to make sure that they find the right founder, work with the right founder, provide the right guardrails. At the end of the day, the founder does the work. The founder is really the director of the movie. Yeah. And I would say the VCs are producers. They can have some budgets on what needs to be done,
right.
But they really don't have a handle on where the company goes. Yeah. Because at the end of the day, execution is left to the founder and the founding team and the team itself. But the guardrails hopefully help, and being a partner very early on helps in trust and ability to get other VCs along the ride. Makes and if something big happens out of all this, which statistically is a 2-3% chance, then all of the parties in that win, right? And which is what the success stories we have seen.
They do. Say Facebook itself is an example of that.
Oh yeah, there's a variety of cases. Example. See, the thing is, of course, today, irrespective of what you think on whether there should be 1,500 unicorns or not, I think there's a lot of companies which are fabrics of society, which are all being VC funded, right? And that's whether that's Facebook, whether that's Apple, whether that's Google, all of these have been VC funded at some point in their life. Of course, they got to profitability faster. They had a lot more thought in terms of burning money after they became public. And I think as a culture, it'll happen in India also, right? This decade, you would see that I think the interests of the public market at the very late stage and the interests of the late stage private equity, they will start converging, where companies will become profitable earlier, will have more discipline, more governance. All of that will happen. India is a very new VC ecosystem. It's probably 15, 16 years old. US is a 60-year-old ecosystem. So I think that you will see. But at the end of the day, to your starting question on what does a VC do, VCs really work with founders, hopefully are of some value to a founder. For example, we are far more an early stage platform than a VC, right? A VC typically provides capital and really provides these guardrails. Yeah. For example, an Antler, and maybe we'll come to that later, also does a variety of other stuff at the very early stage, because founders at the very early stage need actually way more than capital.
And I'm actually coming to that only. So I think that sets the tone, I think. And I really wanted to ask that question because not a lot of people from an engineering background, even thinking of starting a startup, they don't even have the clear picture on what does a VC even do. The reason I wanted to talk to you, of course, was about as engineers and the current sort of market cycle we're going through. A lot of people are saying that a down cycle is a great time to build, right? And of course, all the times, like if I talk to my peers who are engineers, oftentimes they come up with nice little ideas, building some side projects, and then somebody says, hey, you should actually launch this project, make a startup out of it. The one thing that I've seen here is that it seems like a daunting challenge oftentimes to even think about it. Okay, how to do it, I will even ask you on those questions. But the first thing is, like, let's say somebody with a technical background, typically, spent 4 years in engineering college, went out and maybe even a mid-size or a large company have gone and worked. you really know how to build things for sure. If somebody tells you what to build, you can go ahead and build it. One of the things that people generally feel very afraid of, I would say, is that, hey, I don't know how to go ahead and sell.
Mm-hmm.
I build something, I don't know who to sell to.
Mm-hmm.
I put a post on Twitter, maybe 2 people like it. Right?
Right.
You are telling me that, hey, you can make a startup out of it. Even I don't know how I can make a startup out of it.
Right.
Right. Or like, is this a correct idea to go ahead and build as well? And sometimes I have seen people have come to me and said that, hey, this project I have built, what do you think of it? And I say that, yeah, nice project. Have you figured who will buy this?
Right.
A user who will use it. And they're like, no, I have not thought about that. And then they suddenly get very overwhelmed, like, oh shit, how to figure this out, right? So come to the question is like somebody with a technical background as an engineer who's building things. How do you even decide like, okay, maybe this is something that I actually want to turn into a product and go out and sell, right? How do you decide that? Should I think of that maybe I am enough for this? Or should I think of, okay, maybe I bring a friend along who probably knows how to sell, maybe knows how to market.
Right.
And at this stage, do I need money from somewhere? Should I put 1 lakh from my bank account? I have 10 lakhs in my bank account and somebody's saying that, hey, why don't you put 1 lakh into this? Like maybe let's say I want to buy a 3D printer for 1 lakh and print some parts to it.
Right.
Obviously, taking that risk is also somebody would be thinking a bunch of times around.
Absolutely.
Right. So this plunge itself, like the decision itself, like should I start building something? How do you talk to somebody who is in this space? Like what are the things they should think of?
So one of the toughest decisions is to move from employee to founder, right?
Yes.
And we have seen this one repeatedly, right? Antler's core product is actually something that is offered to people who are making that shift from employee to founder across whether you're tech or business or product or whatever else. But I'll come to that in a bit. But I'll tell you the modus operandi in terms of the way to think about this.
Yeah.
I would say the first thing is to figure out whether you are ready for that journey, right? Because at the end of the day, if you're not ready for the journey, and again, there are exceptions to all these rules, but 80-90% of this, you should go through this structure, right? One, are you ready for this journey? Now, the are you ready for this journey has way more than just your technical skills, okay? Let's take the example, I think at least the audience for SCALER would be people who are reasonably adept at engineering and maybe they are, 3-4 years as a software engineer or a tech lead or, somewhere in that career path of being an engineering manager or something, right? Now, for most people there, I'm going to assume that your skills in what you do is very strong. Otherwise, you should not even be thinking about it. You should cut it off first. If you're not a good engineer, you'll not be a good CTO. You'll not be a good founder, right? First, be a good engineer because I'll tell you why in the second step. But the first step is be very good at what you do. Be very good and make sure that, a lot of people, there's a stereotypical version to also very smart engineers is also don't be a jerk, right? Which is, don't be someone that is so head-weighted that, your code is great quality, but people hate to work with you, right? So be someone that people have a respect, people want to work with, be very good at what you do. Third, which is not anything related to engineering at all, which is your personal financial situation.
Right.
One of the biggest reasons people, because the engineering career path is also pays a lot, right? Especially if you're someone of quality. The pay rises that you see is very, very high, right?
Of course.
Now, you genuinely have to ask yourself for the next 12 to 24 months, if you were to do a startup and if you're not going to raise money or you're going to run with a salary of 1 lakh a month, do you have enough of a bank balance? The answer is yes for most people. Most people overvalue what that number should be. They think that they should have earned in crores before they make a decision. Right. Honestly, that's not the case. If you're a 25, 27-year-old person, 5-6 years of experience, not too many dependencies, no kid, maybe not even be married, maybe not even a big education loan, you really don't need more than 20-30 lakhs in the bank, right? And which going by current salaries of engineers, that's a 1 to 2 year. Yeah, I mean, in 4-5 years, 100% you would have it.
Or something.
Absolutely, right? So I think people overvalue the amount of finance that should be there. And the fourth and the last thing is, I go back to what I started the podcast with, which is you should have a genuine want to create and show a legacy. Right. Because for me, this is truly across any kind of backgrounds. It does not matter whether you're a product person or a marketing person or an engineer. If you really don't have that kind of work ethic or, passion to actually go build something where you get the joy of others, seeing that and valuing it, you probably will never anyway want to be a founder. You can go build stuff. There are enough Googles and Facebooks of the world which will give you great technical challenges. So ask these 3-4 questions in stage one. Are you the person that's ready, right? Again, I'll reiterate. One is, a very strong, good engineer first up. 2 is not a jerk in terms of dealing with people.
Be likable.
Yes. 3 is wanting to actually create something in terms of a legacy. And 4 is just my personal financial situation in terms of what I need. And be clear there, I'm again saying because of experience, a lot of people overvalue how much they need. They do not need that if they really strip down to what the basic lifestyle they probably already live in, right? So once you're clear of this very, very personal thing, then it comes to the space and the co-founder, right? Now, to your question, most successful startups, at least in the early years, need at least 2 co-founders because this journey is very lonely. It can shake you up a lot. It means that it's better to go along with it with someone that you trust or are able to build trust and respect with, because the load on 2 people is always easier to manage than the load on 1 person, right? There's nothing for or against a solo founder. I'm just saying that you don't have to, at this point in your life, be learning everything which you can find someone way better than you, right? So to be able to get a co-founder, and again I'll talk about the Antler Residency in a bit, but that is the best way to go sell. You don't have to, I mean, sectoral knowledge, selling ability to get investors, being the outer facing one is absolutely fine that someone else holds it. And now what do you look for in a co-founder? Of course, more than complementarity is value alignment, vision alignment, some level of respect, working style match. And again, there's a variety of stuff that you have to go through if you don't know the person already. But making sure that you are empathizing with a problem statement is the other part to it, right? Because at the end of the day, if you're going to be spending your next 10 years in something, you at least want to have passion already on it, or at least be open to building passion on it. You can't, just because it's a lucrative opportunity or everyone is talking about AI right now, doesn't mean anything, right? Unless you are passionate about it. So I would say that's the second step, which is identifying the space and identifying the co-founder, right? So self-ready, identifying the space and co-founder, assume you need a co-founder. In most cases you will. It could be another tech person also if the product is very technologically intensive or a platform. But then at least let the other person have skills which are a bit complementary to you. Because if both are great tech, very introverted, not able to sell and stuff, that won't work, right?
Yeah, both of you would want to do the same thing.
Exactly. Both of you would want to do the same thing. There'll be territorial problems in the early days and stuff, and that's all not required. So have someone who's complementary but aligned on vision and values. The last piece to that is to get that first step, right? And coming back to your question on, if I just should build and put it out, absolutely you should, right? Because you don't need like one picture perfect version to go put it out. And today there are a variety of ways and avenues to do something. Now, we very strongly urge people to sort of really quit and do it. Of course, at the very early stage, if you want to even validate customers, that could happen in a Telegram or a WhatsApp group. That could happen in a Google site or a Google form. You don't need to build any tech to validate customers' interest, whether that's enterprise or whether that's consumer, to put out something, to ask a few questions, to put out a mock, a Figma prototype. These are all things which you can do with absolutely no tech. And you should do some of that to make sure that you are convinced that this is a worthwhile bet. Because at the end of the day, it's not just about consumers wanting. You also want to, especially if you want to go raise VC money, you should be able to actually build it in a market which is big. One of the biggest challenges tech folks do, again, based on my observation and talking to a bunch of folks, is tech folks bring a very tech stack first or a tech solution first approach. They don't come at it from what really customers want or is the market really wanting this need, right? They can think of something very cool, so they want to go build it out. But if there is not enough customers or if there's not enough market traction, which is what your co-founder should do for you, right? Which is, if they can hold that part of it, you can go build all the cool tech stuff. Maybe your 8th idea is the one that really is worthwhile to build a business. The other 7 ideas are great, cool tools, cool hacks, but they should never be a startup. They should not be a business. Right. So I think going through this cycle, maybe with multiple people, over multiple ideas, will also get you into the flow of making that final step. One of the other things I've also realized interacting with so many engineers during my Urban Ladder days, we had a 80-member engineering team, but of course that was more like 5-6 years back, even off late, right? Talking to people who are managing huge number of engineers and or looking at people who have not yet made that shift. Somewhere that risk quotient, right, for some reason, especially when the market is a bit low, quote unquote down, seems to be higher, for the risk quotient. The perceived risk quotient of not taking that first step seems to be higher for engineers. I don't know why. Maybe there's some psychological thing here in terms of not wanting to make that jump. Maybe it's related to I'm already getting a pretty high salary, a variety of other reasons. But to take that quote unquote last step from employee to founder today is way easier than 5 years back, is way easier than 10 years back when some of us had to do it. So I would say people, because if you're a smart engineer, I can assure you in 2 years, if you tried a startup, it did not work out, 100 people, first, the market will be way better than today, right? Because it is a cycle. It's a cycle. Today is probably one of the worst times, but it's, to go to a growth stage or a, late stage startup, because there aren't too many opportunities to grow.
Right.
Whereas it's a great time to start up, right? Because the market is ripe with opportunities and not too many people are making the shift. So I would say now is a great time. You would actually go back 2 years if something doesn't work out. And that first step can be a variety of things, as long as you are ready. As long as your co-founder in the space is ready, I think taking that first step, there are 100 avenues today.
Nice. The other piece that I want to also, get your opinion on is, and then this is a piece of advice I have heard from a lot of people come, and then I, to a degree, I, sort of agree to it as well. Is about do you need to have had some sort of experience at a very early stage startup, not as a founder, but as a lead engineer, before you should even decide to do a startup. And then where I'm coming from is that Scaler and all the kind of people in my classroom, sometimes I often see there are people who have not really worked at a company with less than 500 employees yet. Probably right out of college, I've gone to maybe something like a Infosys or a TCS, which is a very different atmosphere. 1 lakh people, right? Post that also, maybe I've gone into Amazon, right? Again, 5 lakh people, engineers, it's a setup I'm working. And then versus that, and then talking to some of those people, sometimes I also see, and probably I also went through some of it in my first startup, was like, okay, there's this place where I'm looking for, the customer interest. Should I paste a Google form, embed a Google form to my website? And like the initial engineer instinct is like, hey, I mean, I should build my own form. Why should I enter a Google form inside it, right? And then today, like at Scaler, it's a huge business running, and like there are a lot of places where we take feedback. And it's a type form embedded inside the page because it works and it's perfectly fine. And our tech team is not like the world's best professional form builders.
Right.
Type form is that. So like inject that. But like as an instinct, as a first time as an engineer, sometimes it's like, hey, like there are 4 fields in a form. Why should I not build it? Why should, like, what would people think that if I go and build, right? So that mindset shift also is like, how at an early stage startup, how do you build things? What is your recommendation on? Do you think like if I have only last 5-6 years worked at large companies, I should probably go to a early stage startup where there are 5 employees, go and work there? Or is that not necessary?
I think there are 2-3 angles by which I would make this cut, right? I absolutely love the angle of making, say, a good part of the very smart engineers go for the highest salaries or the biggest scale problems. Now, scale problems by inherent nature will always be much higher in Amazon and Facebook than in an early stage startup, right? Because that's what attracts strong engineers, and that's understandable. Do 3-4 years of that, right? Get a good brand name, get a good set of processes, get a good set of maybe cultural tones right after you graduate from engineering, right? I think there's nothing right or wrong about it. It's absolutely fine that you join a big company. Let's call it a big company. It could be a Flipkart also, it could be Amazon also, it could be a Facebook also.
It's like 500,000 people, like
where you're a small piece in
a small piece and things are working.
So you're doing something of a small thing, but you at least understand scale, understand process and stuff. The next shift, don't go to another big company, right? Unless you never want to be a founder, then please go to another big company and live all your life in Valley and stuff. But if your real second shift after 3-4 years at max of doing this should be, unless you're going for MS or something, it should be to get to a mid-stage startup and take on a mid-senior role, right? Now, a mid-senior role in a mid-stage startup will do 2 things. One is it gives you way more responsibility and have to now hire without a brand name. Okay, because that is one of the toughest things you will do as a starting founder, right? Hire talent when there are 20 others pitching with 20x the salary, right? So you will build your own team. 2, you will fail. Now, here in the big companies, failure is not rewarded. Failure is not seen as a great thing, and you should not start up before you actually have failed at something. Right? Now, failure could be execution, failure could be an initiative that you passionately did not take off. It could be a variety of reasons for failure, but you should be able to have failed before you actually become a founder. And a mid-stage startup, right, gives you some conduit to scale, but at the same time, you also have certain things that you try. Now, from a mid-stage startup in a tech lead kind of a role, it's a great time to start. You don't have to go to an early stage startup yet, right? For someone who doesn't want to start after, let's say, 6, 7 years, so maybe you're now 28 to 27 to 30, and you want to start after 30 for whatever reason, right?
Yeah.
The third shift that they should do is an early stage startup,
Right.
where they become someone who's architecting pretty much all of the engineering. Because I'll tell you why. Early stage startup, the question you might ask yourself is, and this is something that I did, when, so I was interviewing right after Yahoo with Flipkart, right? And I talked to Sachin and Binny and VG, who became the founder of Udaan and who was head of product. And we really had a very good set of conversations. At that time, it just so happened that I started off Urban Ladder. And the thought process was, why join a startup? Which is, at that time, Flipkart was early stage, 2011 I'm talking about. And just do my own stuff, right?
Yeah.
So you can literally do one leapfrog at least. It's very difficult to leapfrog from big company to your own startup.
Yeah.
From big company to mid stage to very early stage, you could ask the question, if you want more experience, you are just not at the right time, you haven't figured out your personal stuff, you haven't figured out a co-founder, then do the next jump to an early stage and then you start up. And that's absolutely fair, fine. So 3 years in quote unquote big companies corporate, 2-3 years in mid-size and understand a particular sector. But at least when you make those shifts, make it towards places where you optimize for the space and the passion you have for a particular space, as well as optimize for the people and the culture, because you want to really try to find your potential co-founder there or build a network that can be your next set of employees. The good part about this shift, rather than, I have nothing against people who are fresh out of engineering, college students starting up, or people starting up 40. Exactly.
But I don't recommend that, to be very honest.
See, and that's the thing, right? Because at the end of the day, at that point in time, you're the quote unquote, we had a session, we have this thing called the fellowship at Antler. And the session that I always start with is saying that 90% of you should not become founders after when you're in college, right? Which means 99% of the people who are graduating out of college should not become founders because they don't have the network, they don't have the experiences. They have a lot of raw passion and no dependencies, which is good. So I think that's probably, if I were to put a template career path, big company, mid company, you can skip early stage, become a founder. If you are not ready, then become a early stage and then become founder.
That's a great, I think, template to think of it, and the leapfrogging is possible sometimes. I think sometimes the second step leapfrogging is also sometimes possible. Like
it is
possible. A big company to a small company.
See, I'll tell you the reason why. Probably from just big company to, of course, big company to early stage startup is absolutely fine. You just have to get used to a lot of ambiguity and risk, and people
find it sometimes bring in a lot of process and people don't like it. That sometimes happens.
That's the reason why I said a bit big size to mid size to a small, because you build a lot of processes. People may not like it. Ambiguity, risk, shutdown, all of that, so much pressure, so much change might not be something that you'll be able to handle, which is why one gradual shift and maybe faster shifts might be the right answer.
Right. One interesting, probably anecdote, but at least 3-4 of my friends from college I've also seen is like people who have worked with early stage and mid stage companies for a while. And then after that, like they really had that passion to actually start something, but they ended up going to a big company. What happens is they leave within a year and they start up something in SaaS because they've seen all the problems. I think that you can't engineer that to happen, but it does happen for a lot of people I've seen.
See, one of the things that as engineers always want to work on exciting problems.
Yeah.
One of the feedback that I got from a bunch of people who have started in not so exciting, the unsexy problems is, if you can tune yourself to really understand the consumer need and take on some of these quote unquote unsexy problems, the number of great engineers going after that is much lesser, but the market sizes of some of that is massive, right? So if you are very keen on building a large business, a very scalable technology or a platform, what might look uncool, unsexy at the start might actually make a lot of sense. And you just have to partner with someone. A lot of people, success begets passion as much as passion begets success, because you see something, you build a team, you see some, you've raised some funds, you're in the market, you're talked about, you're doing some interviews here, all of that. I think that also gives and tends to increase the passion in something. And I would say that's also a very fair way, right? Now, whether you get into quote unquote something like SaaS into a big company, or it could be a medium company also, that's fair. It doesn't have to be really a big company. But whatever, at the end of the day, every single path is very unique. Whatever rocks your boat is good. I would go back to the foundations. Do you really want to do it some point in time?
Correct.
Then architect it to make that happen.
Right. The next piece that I want to, really get your opinions on is, like, once you do take at least the mental plunge, even if you're not really left your job or you have not really put up a product and post, or you have not yet done any of those things. But even then, if you have at least very dedicatedly decided that this year, this idea that I have, this space that I want to solve for, whatever, like, maybe you want to make an insurance app for blue collar labor, whatever, some idea you have in your mind. Okay, and I really want to do it, and I will do it this year. This year I will definitely leave my job. Right. That's a mental switch. I know that it happens for a lot of people off on. So once you have gone through that on, and whatever things you said, I think that definitely helpful. People would go through that checklist. Okay, it's sorted that I know who I would start it with. I know that my personal finances are sorted. Right. I've had some experience maybe at a startup. Oh, that's fine. Now then what I've seen happen is, like, today there are so many, ways to also go about it. Right. I mean, there are people will tell you that, hey, if you're starting a startup, you must apply to YC. Whether you get it or not, the process is great. That's a generic piece of advice I've seen and floating around a lot. Right. People will say that, hey, sell first to a few people, then go and talk to VCs. Or somebody will say that, hey, at least talk to the VCs and figure out what is their thesis on this space. Lots of different advice around this space. But, like, if you have a problem statement, some sort of a initial solution that you want to build, who you build it with, those things are sort of, in line, right? How do you go about deciding this part, which is like, should I talk to some angel investors? Should I ask some my rich uncle who is a VP at Facebook to give some money for me to do with it? Should I look at, residency programs? And I remember, like, when right out of my college, I had just started a startup and everything, and somebody from Antler had reached out from, I think Antler India did not exist then. It was Singapore Antler. They're starting the first residency program.
Okay.
And I did not know about YC actually then. And in that call, they said that we are sort of like YC, but then here you can come and, it's like a hostel kind of setup. And I feel like, hey, that's interesting. I never thought that somebody would be doing something like this, right? And that's when I actually looked at YC. I was like, oh, wow. I did not know about YC, right? I mean, I was not thinking of startups or anything in college. And my first startup, like, I would not call it a startup for a while. I would say that, we have just a educational institute. We are teaching some classes. And then eventually it became a startup. But nevertheless, so I think back then the awareness, for example, somebody like me who was actually starting a company also did not have so many options out there. Today, I think thanks to social media, thanks to the circle and everything, there are a lot of options now. So how do you go about doing this?
So I would say prioritize as to what you need that first need for. See, at the start, everyone needs capital, right? And capital is a very consistent need. And now whether it's 200K or whether it's 2 million, it's something that you'll realize and you'll figure out. And that's, as I said, if you're an engineer, that's something that you anyway have a co-founder to also help and figure out, right? Keep capital aside because it's a constant need. Now understand as to what sector you're building in. Let's say if it's healthcare, maybe you need access to clients in medtech in India, right? Maybe if it's fintech, you need a lot of regulatory help. Maybe if it's SaaS, you need your first 20 clients abroad. Maybe you don't even have your co-founder yet. You have a great idea and you're still on the hunt for a co-founder, right? I think the different platforms even today have very different needs that they're able to solve better than someone else, right? For example, I'll just take the example of an Antler. I think Antler, we have 3 different things in terms of for the first 12 months for the founder, right? One, if you're a college founder, we have this thing called the Antler Fellowship. The Antler Fellowship is very optimized for college founders who are in their final year, who are making this call on, do they continue building a startup or do they want to go join a job because of the pressure of returning the education loan and stuff. And I'm sure you probably went through the same thing. And the fellowship's very specific purpose is to give you 8 lakh rupees, work with you for 6 months, get you that mentorship as a grant, not equity, nothing. And even make you realize whether you want to go do this at the end of your college journey.
Oh, nice.
Right? And when there's no equity involved, people are first of all open to, taking it at that point in time. At the end of the 6 months, maybe 2 things will happen. One is you are ready to go plunge into this full time, right? And you want to pitch to an investment committee and raise money from an Antler or anyone else for that matter. Or 2, you say, no, I want to go do higher studies, or we give you that feedback that, hey, it's great what you're building, but this is not a very venture fundable opportunity, right? So the fellowship's job is very specifically that for college founders. There is nothing like that exists out there today.
Fantastic. Like, you're giving a great cushion for people to try.
Exactly. And it's not just that. During those 6 months, you give your personal mentor network and a variety of other stuff. So a lot of college students or engineers find this extremely useful with or without a co-founder, right? Because the purpose of the fellowship is not to help you find a co-founder. It is really to make that journey from student to a founder, even make you realize whether you need to do it or not, right? So that's the first one. The other big one that Antler today is known for is the Residency, which Antler in Singapore reached out to you. But in India, we started this almost a year back. Now we run two cohorts, where again, someone who is in that fag end of leaving their job has ideas but doesn't have a co-founder and is debating between two, three ideas in the same space, right? For them, what a cohort of 70, 80 people, very smart people, physically co-located does is it really thrashes out a lot of the assumptions, a lot of the ideas, because there'll at least be three, four other people in that cohort who have probably thought through the same idea or thought through it even better and more, right, for a much longer time.
Right.
So you don't, I mean, you would be afraid to put it out in the open, right, because like someone steals my idea, right? But it's never usually the case that someone, it's always about lack of execution or lack of focus on what the problem statement you pick. So the cohort gives you a bit more of a very, I would say a trusted network to also thrash out and get in that urgency, because we expect you to quit your job, right? The first step, if you were to ask me on anything, your previous, the question that you asked, is to really get the hell out, send the resignation letter to your boss, and then start up. Because when you moonlight, the fire is still not in your pants.
Yeah, it's
right?
like that Batman movie where he climbs out of that well. You have to drop that rope.
You have to drop that rope. You have to get that fire in, right? And that if you're still getting a salary where you're spending 2 hours every day because you can finish your day-to-day work in 6 hours of work, that's not enough, right? That you're not really, it's not really hit you as a founder. So I would say sending that resignation letter, saying that, getting that farewell party in, all of that is extremely important. And what Residency does is forces you to do that. Because a lot of other programs get you this moonlighting thing. And that's not really, see, who else wants to trust their life on you as a co-founder if you've not even quit your job and you're still getting a salary, right? They'll say you're not taking the same risk as me. Why should I give you the same level of equity? Why should I trust you that you will run the first hint of some failure, right? So taking that first step, assuming that you can always go back 2 years later, as I said, is something that's a big show for getting a very exciting co-founder, right? So doing that first step, and the Residency also not just does that, it thrashes out a bunch of ideas. It helps you build a trusted network. It ingests urgency into your steps. It makes you show stuff to customers, get real traction. And last but not the least, it brings a lot of science into the process: personality assessment, values match, what questions are important, why you do what you do.
Right.
Is the working style going to match between the two of you? Are you going to have a lot of friction? Are there enough complementary skills? A lot of this, which you think a few conversations will help, there's a lot of structure and guidance to it. There are also online platforms. There are platforms that allow you to do this moonlighting. But honestly, if you want to have the best outcome, I think a Residency is always more serious. And what it does in a 6-month period, 3 months of the program and 3 months post investment, is really to take you to raise a $2 million round from a VC, compared to when you have not even quit your job today, right? And that's a huge positive. The third of what Antler does is what is called the direct pre-seed, where you already have your co-founder. And there, Antler is able to very differentially take you global, because we have in 25 countries, we have funded 800 startups. So if you're specifically an enterprise startup that is selling to the mid-market or startups, or if you're a Web3 startup building something, quote unquote, in core platform, or if you want some kind of a collaboration with, let's say, specific areas that are more global, like climate, or a variety of stuff where there's more innovation that happens global, Antler is able to provide that network to collaborate much better, faster, right? Y Combinator also does a phenomenal job on a variety of global stuff. But at least, a lot of there are platforms, there are syndicates, there are founders, there are angels. At the end of the day, there are some people who are there to provide the capital. There are some people who provide at this very early stage very specific benefits.
Right.
And I think you should be very clear after you cross the self stage, after you cross the space and the co-founder stage, at which, if you've not crossed it, the Residency is a great product to apply to. And today, right now, we have a running cohort of applications till May 26th. You can apply to that. But if you already have all of these figured out, then you just need to quit your job and money will come to you. I mean, there are enough platforms, founders, VCs, whether that's your chacha, as you said, or rich uncle somewhere, or VCs. I think, see, if you're working on an interesting problem statement, you put it out on LinkedIn and word will spread. VCs will come to you usually, right? You can always apply to some of these platforms, of course. That gives you sort of some grounding, and it asks you harder questions than you probably ask of yourself. So, which is why I think going through some of these platforms really helps.
Right. The other thing is also, let's say, for a founder, let's say when we are raising venture capital, it's on the early stage also. what kind of things, I mean, I was talking to a friend once and he was saying that it was very much like deciding how to go for the next job, and everybody thinks that the CTC number is what you evaluate on, but there's actually 90% of it is the other things.
Right.
So probably looking that same analogy here is that what kind of things should one be also looking at to figure out like what should be a good platform to also raise investment from, right? I mean, obviously there are a bunch of trade-offs, like what kind of support you can get. You might be in a place where your biggest problem is probably hiring.
Mm-hmm.
So you might want to bring somebody on board who can help that in some way,
Right.
apart from the money, right? Or it could be like you were saying that Antler is providing some international connections. Where let's say you want to build some green farming or
Right.
something like that. Then again, in India there isn't enough support for that ecosystem. So if you get that, right? So turning it into a little bit more generic in that sense, what kind of things should I look for when I'm looking to raise fund? There's be somebody who would in a way become a partner, right?
Yeah.
They might not be 24/7 a partner. They might be call with me once a month or something, but still they might have a board seat. They will have a stake in the company.
Right.
Right. So I'm bringing somebody into the house in that sense.
Right.
Right. So like as founder, you were saying complementary skills in a co-founder.
Absolutely.
Here also you should be looking for those things. So what are those things?
I
Is
think-
there a playbook around
Yes,
this?
there is a playbook, and it varies based on the stage at which you're raising, right? As you go into the later stages, a lot of it is about, I would say, getting a strong amount of capital with people who can be very complementary partners to your existing venture capitalists, right? Because when you go towards the Series C, D, E, what happens is you're going to be raising maybe $50-100 million, but there are already one or two VCs on your cap table, or, who are there. So is there enough complementarity between them? And is the sort of the relationship between them strong enough? And will they add value to the board, right? In terms of, because at the end of the day, when I'm going public or when I'm doing an M&A where I'm selling my company as $1 billion company, will this be a board that will support me in all that, right? So the later stage, I think, gets clearer because the number of people to choose from is also much lesser. In the early stage, I would say, all venture capitalists want to add value, but founders really, I've been a founder before, right? And honestly, I would go to a VC when I need something from them. Right. If any VC tries to force fit value to us as a founder, I would say, please, I'm here to build. I'm here to build my team. I want to do my marketing. I want to do my hiring, right? Well, why else will I get a great head of HR if you're going to help me with my hiring, if you're going to help me with my marketing, or, what is my function for? So smart founders actually take it a bit more personal, right? And at least in that early stage to say that as a venture capitalist, I want your guidance, provide the guardrails, help make sure that, whenever I come to you with a specific help to a particular connect or, to help me in a bridge round or whatever else, do that. But early stage is also where you want to choose the partners carefully, that there is that working frequency and the trust. Super early stage, which is what I call ourselves, which is pre-seed stage, it's where you actually can go for a very specific kind of a help, right? Which is, if I want to go global, what are the needs? We did a huge survey just before Antler started in India. 1,100 founders we polled, right? And across tech, non-tech, all early stage, all in the last 12 months they have started. And we got a lot of intelligence there. I think founders, capital is, as I said, a big ask. The second biggest need that founders have at that stage is to get that first, what they call idea validation, right? In terms of first customer traction or the first 3 customers or 10 customers or some paying money. Third is ability to help them build, right? Because some of them maybe are founders, don't have a tech founder. They have built stuff with some outsourced agency. They're not happy about it. So really ability to build. We asked a very specific external question on co-founder. And all of this, the need gap was between, let's say, 60 and 40%. So it was all very close. It was not like something was 80 and something was, capital was 100%. But outside of ask for capital, everything else was in a very narrow range, right? The last but one is ability to have sectoral help, right? In agri, I want something, a net, how does agri supply chain work and all of that stuff. And the fifth one, I think, was more horizontal help, like finance, legal, company setup, all of that stuff.
Yes,
that was maybe 20-25% because I guess that ecosystem is a bit more mature. But at least these 3-4 needs, whoever is the partner that is able to give you the need that you want the most, right? For example, if you want a co-founder, Antler Residency is probably the best, right? If you want to go global, maybe, Antler is great, so is Y Combinator. If you want something in consumer goods and you want to raise early stage, I think some of these consumer goods focused venture capitalists are pretty great, right? So I would say it's based on which sector, what you really want the help for, and then you will be automatically able to prioritize to a list of 3-4 people as your top priority. If you don't get those 3-4, you can go raise capital from anyone, but then prioritize based on your need.
Understood. I had another question about the residency. Typically, like an accelerator kind of program is where you do have the product in place, right? It's not where you're meeting the co-founders and starting work. It's where you started something, and then, so that's also in a seed kind of area that's coming in. But with the residency, since it's more like come here, marinate your ideas, find someone who can build it with. I'm talking more from, let's say, from a technical people, like as an engineer. Like if you really want to build something but you don't know what you want to build, right? As a lot of people are in that phase. Like I really want to start up, right? Finance side, personal finance side, I'm sorted.
Sure.
I can go without a job for 2 years. I know I can go back into the industry. All that sorted. I really do want to start something of my own, but then I'm not really sure what, right? For somebody like that, would you recommend like coming to a residency program and then finding out some interesting problem to solve, or do you think they should at least have some sort of a problem statement that they really want to work on before they do this?
It's a very fair question, and actually in the residency, one very interesting thing we do is for business founders who have been marketing, product, let's say operations, we expect that they come in very high clarity on the space and the customer they want to go after.
Right.
For tech people who are tech leads, engineers, we actually allow for them to come with any kind of space they want to go after.
Right.
Which is precisely for this reason, because tech founders can get excited when they know that there is a potential scale and when there is an interestingness in the problem statement, but they also want a very high trust factor with the person and respect for that person. Right? So they could very easily shift from finance to SaaS to health tech if they believe that there is a end state scale. There is a complementarity and excitement.
Light on the other end of the tunnel that
they can shift.
Some serious engineering problem to solve.
Absolutely.
Give me one, I will solve for you.
Absolutely. And this is why when, while I stressed on in the second step on, becoming a founder, that you should be clear of the co-founder and have some passion for some space. I think empathy can be built also in a new space, but don't go into something where you have zero, just hate it or don't have any liking for
Indifferent
to it and stuff. So if you are like, okay, I like these 1 or 2 problem statements in healthcare, these 1 or 2 in AI as a broad space, in 1 or 2 in this fintech and whatever else, or I am really passionate newly about climate, then you pick and you have a variety of founders in a setting like the residency. So I would say that actually, so for tech founders, we do not need them to be passionate about a specific idea or a specific customer. And we give that allowance only for tech founders for exactly the reason that you said, which is they can get excited by people who are solving this in interesting ways.
Yeah, because there's something I have heard from people, like, and not just few, I would say like at least dozens of people have heard, where they're like, they really want to start building something.
Absolutely.
But they're like, these 3-4 places, anything I can build, I don't really have a very clear idea what I want to build. I've maybe built some side project in 2-3 different spaces, but
the problem is that is great, but at some point in time you have to make that jump. Otherwise, you'll always be a great hacky person who likes to build stuff but doesn't want to take something to the next stage. And one of the big asks that I would ask, right, of even engineers is, see, this is an organization. If you're building, you're going to be moving from, if you're an IC today, or if you're a tech lead today, the more senior you become, the more hands-off you become. And you don't want to be that when you're becoming a founder.
Right.
Which is why engineering folks who are 35, 40 and stuff, who have now managed teams of 20 people, 30 people, engineering manager, director engineering, they find it harder to start up at that point in time. Right? Because they have to get their hands dirty, they have to iterate quickly, they have to do it with themselves or 1 or 2 engineers. They'll be able to attract talent because they probably have respect, but they've sort of, if they're not coding today, they lose that touch. So we always see engineers, quote unquote, in the residency program much younger, right? Because they need to be in that first 6-7 years for them to not lose touch with coding. And if you can do that, if you can do that iteration across 3-4 people, 3-4 spaces even, but make that call at a particular point in time, which is...
You can't keep...
Otherwise, you'll become a great builder for all residency founders in the future, but you will not be a great co-founder, right? And we're not looking for someone who's every year, just helping our residency founders. We really want them to be a co-founder for one startup.
Absolutely.
And to make that jump, have your own criteria by which you're going to do that, but make that jump, right? With some person that you trust and some space that you want to build. And don't keep coming back every 6 months, 12 months, because let's say for 6-12 months, you have to assume traction might not come, right? And if you're not in it, right, that I'm going to do what it takes for the next 12 months, 18 months, 24 months, which is why we ask for passion, because if that grit is not built, because you're going to hit failure the first 6-12 months, you'll very easily give up and go to a new space, right? And you don't want that to happen either for the business founder. Less chance, because they're passionate about that space. They're not going to give up faster.
Right.
The tech person who's ambivalent to whichever space might quote unquote give up faster, and we don't want that.
Right. So I think if somebody comes with a very open mind during a residency program,
yes,
at least they should be going out with probably similar conviction as the business co-founder.
That is the expectation. And that is the expectation, and let's hope that happens here.
Right. One more question I had, which was actually taking a cue from what you were just saying, like, if somebody becomes an engineering manager or a director and then less hands-on and something like that. While that's fine, I also want to know that, if you have only been an IC so far, right, is it in a way sort of a hindrance or a constraining factor that you have never probably hired for a team? You have never probably gone and asked for a budget for your team, like given that this is what you have to build for this quarter, do some land grabbing for budget, like those are the typical things. Even for the first time you lead a team or just first EM, those new things that happen. And these are coming from, like, I designed a program for engineers to become engineering managers, a curriculum around that. And these are the things that like a lot of CTOs in the company say that these are the first set of skills that people don't have if they've been ICs for 3-4 years. And this is the things that we need to train them on. It's like, understanding the needs of your team, of course, the people side of the things. But more than that, also hiring. Right. And hiring is like juggling a lot of things, because you have a certain budget to deliver something over the next few quarters.
Yeah.
What will you spend on some SaaS spends? What will you spend on hiring? Do you spend 40 lakhs on one guy, rather 20 lakhs on two guys? Like which trade-off will work out good? If you have been just an IC for 4-5 years, it's probable that you have not gone through that.
It is trickier, right? And that's why we suggest that 6-7 years experience is that sweet spot where you probably are a tech lead on the way to an engineering manager. You have you built, let's say, something of over 2 experiences. You've also seen 2 different cultures. You've hired, which is why I said that shift of being from IC to, let's say, a tech lead is probably the right shift before you become.
When you've done some of this thing.
When you've done some of this stuff, and also because people have to look up to you, right? It's about attracting someone to be hired. And if they go look up you, and if they see that you're a peer, they might not come and join you, right? Whereas if they see that, okay, there are people that have worked with this person who say good things about the person, as well as they know what it is from a budget perspective, or they've also shown career progression in their last experiences. Because as an early stage founder, everyone joins just for you as a founder, right? There is nothing else. You have your vision, you have the 2 of you, let's say, as co-founders. All the quote unquote ref checks on whether I'm going to depend on this company being a big company is based on ref checks that I might do of you and what people say about you. And if you have not either grown, if you have not shown some kind of growth either in your own career in your last 2 experiences, low chance that I might not respect you enough or I might not join you. So for that reason, I think it's important. And that you have grown through that, right? And of course, some of them might have architect dreams at that point in time and say, I'll always be an IC, and for 7-8 years, I just want to be the quote-unquote architect for the company, and may have never hired anyone, right?
Then probably you are not even on a track to become a co-founder of a company, right?
See, and that's the thing, right? You might on things which are maybe very heavy tech.
Yeah, it's a pure tech, like a DevX, SaaS product kind of things.
Pair up with a product person who can help you on hiring and stuff, but assume then that you're not going to build a big tech organization. Right?
Not a consumer tech kind of thing.
Not a consumer tech kind of thing. If you have 100 people, you're going to be probably sucking at, managing those. And there'll be a lot of frustration. So you don't want to do that. But at the same time, no hard and fast rules on all this, but of course, it's better that you have those 6-7 years there where you have shown some of these.
Like maybe like the last 1 year of it has been like doing some budgets, doing some hiring. Is that?
It is less about budgets and hiring, more about that people have the respect to want to come work with you. And
that is also, I think, very important in tech, because a couple of startups that I've advised on, I think some college junior, I invested a little bit of money in that, and somewhere, there were some of my former students, they said, you want to, advise us on certain things. And I figured that most of the places, like me helping them out in their tech architecture or, how to go about building things, those things, most of the times I ended up saying that, hey, you have this sorted. I don't think you need my help. But where I was actually able to add a lot of value in many of those places was actually hire people for them.
Yeah.
Like even like some places extremely hands-off, just being one person in the interview loop.
Right.
Like, okay, there's somebody who is somehow associated with their tech team. and that person took my interview. They were really interested in joining. Some places where I did like the hiring posts on LinkedIn,
Right.
getting those people on board.
Yeah.
And I think that is, I'm not sure if in the other fields it's so much prevalent, but in tech at least people really do want to work with people who have solved tech super hard challenges, and like the respect also sort of comes that way. Like you have swung a bigger X than me, so I will walk with you.
And that's the thing, right? If you're very young, where you have not seen those scale, have one or two people in your advisory and even put them on your website, right? That these people are, they have seen scale challenges, because that's the end of the day. It's all about building a story, building credibility, whether you're a tech or whether you're a product person. So build some level of advisory which can contribute to some of those missing gaps for you as an individual. So I think that's something that people do. And if they put your photo in their website, I'm sure that adds credibility to them, right?
Yeah. And the person who coming in, they just want that, okay, somebody who has been doing, challenging engineering for 5-6 years, I want to be able to work with somebody like that, rather than somebody who's just out of college.
Yeah.
Stuff like that. So that's it. And then one I'd say final question here. And then we have already talked about, like, you really have to take the plunge, get out of a job and everything. But I think one of the things that people are scared of, at least engineers, is like the thing they're leaving is also pretty lucrative.
Right.
Engineering careers have been great, and I believe like in your residency programs and all, getting more engineers is also a challenge because of that. Sometimes that the thing that they're leaving behind.
Yeah.
Right. And specifically, if I actually double down into that, and I myself have a story to tell around that, but I really want to ask you is that how should people think about this? That I'm doing this. Let's say it does not work out. 2 years, 3 years later. What's the sort of risk I'm taking? Because what I see, a lot of people think their career is a very linear rung of ladder, and I step off the third rung, I will have to come back into the third rung only, and all my peers will be in the fifth rung by that time, in 2 years' time, right? That's a sort of way of thinking which is preventing a lot of people. I know that for sure. I know people personally who think of it that way, that since I'm lead engineer now, in a couple of years I can be principal engineer. Now if I go and do a startup and it does not work, I will come back, I will again be lead engineer. Some of that thinking. The other thing is that's also something I've heard from people, is that if you do leave a fine engineering career track that you are going through, sailing through, and you come and do a startup, and even if let's say that it works out well, but that you want to go back into hardcore engineering sometime later in life. Let's say the startup works out well, you sell it, 5 years later you want to come back, something like that, or it does not work out well, you become unemployable as a hardcore engineering solving person, and people will always look at you from a generalist lens, and you might have founder's office or entrepreneur in residence kind of roles only left for you.
Right.
You will not have a director of engineering role left for you anymore. People do think that, and this is thing I've heard from 2-3 founders who are doing well with their startups. And they're over, I don't think I can go back to engineering anymore, nobody will take me. So about these concerns, what do you say?
I think a lot of it, because it's the last question, I think it's time to enter some philosophy territory. But I think I have a philosophical answer to your first question on the path versus. I very strongly believe that career paths have to completely be abandoned as a path or a straight line or a ladder. As much as I love the word ladder, I just hate it in the concept of a career. I think the concept of a career today has moved to a map. Now, in a map, you don't go to Africa and want some big buildings and some great weather. You don't go to the US and ask for wildlife. You don't go to Europe and say that I want New York style, or you don't go to, let's say, some other place and ask for culture like Europe, right? Every place has something special, right? Every continent has something special. You're going in a map and you want to travel. If you're a traveler, you want to travel to all of these countries, and you have different expectations. You learn something different. At the end of the day, it is not that you're ticking off the 195 countries in this world or the 7 continents. That's not the reason you're doing. You're doing it because you want to enjoy the richness of that experience. Correct? This is why you travel. Now, if you put the same analogy to your career, now you go to a particular and if you now first divide this into, every different journey is anywhere from 2-3 years to 5 years. Some might be less than 2 years for whatever reason, but in a normal case, it's 3 to 5 years. Some might be 7-10 years also for whatever reason, but this is a normal average. And you have, I would say, in this life, Your brain is a muscle. If you stop using it, it will die, which means that you're going to be working till 60 or 70 or 80. When I say working on your own stuff, because financially you will be probably well settled by then, right? But your mind will still be active. You're not going to be just, spending your time on a beach and stuff. You'll get bored. There are enough people who have gone through all of this, who have come back and said, boss, there is no end to all this, because you have to keep your body in sync. You have to keep your mind in sync. You have to go travel. You have to have friends. You have to have relationships. All of it is lifelong. Be ready for it, right? The moment that happens, you're going to quote unquote have to be somewhere employable or be doing something. May not be with 60 hours a week, maybe with 20 hours a week, after 40 years also.
Yeah.
In 40 years to 50 years, you would have gone through at least, if I use the 3-5 year thing, we would have gone through at a minimum, I would say somewhere between 15 and 20 experiences at the minimum, right? There is no one, and sometime later you might be a media person, who knows? Sometime later you might be a dancer, who knows, right? I'm saying today, if you're starting at 20, you have so many unknowns that you're going to go, and every job or everything that you see, don't try and maximize everything around it. You can't have in one place, unless it's, I don't know, Dubai or something, where you have everything from a great beach to great mountains to great culture to great buildings to great party life. Nothing is there in the same place, right? Which essentially means you're making a jump. Don't try and maximize. For example, you go to a Facebook or a Google, maximize your salary. But you will be doing something very small. Don't try and create some big impact. You're not. You're a small cog in the wheel, right? If you're going to an early stage startup, don't maximize salary. Maximize the impact and seeing something live.
Right.
You're going to some other place, maximize something else. It is phenomenal with time that you maximize all 3-4 in one place, right? That happens. But it just takes time, and it's not a sure shot, right? Now, if you go with that mindset into your career, that I'm going to do these different experiences, and every experience I'm going to be mentally certainly challenge myself. I'm going to grow as an individual and a professional. I'm going to try and maximize the financial outcome. Some might be stock, some might be salary, blah, blah, blah. As long as you're in this path of continuously improving on a variety of axes, not all at the same time, but across time, you will not land up and be unemployable ever. People assume that it has to be a straight line, and I get off 3 steps and I come back to the 4th step. Oh shit, it's too much effort. It is not that way. You're moving. When you're taking a trip from India to Africa, you go a particular way. Now from Africa to US, you probably take a different trip. It's almost like Google Maps, right? You take let's say you take a deviation. There is an end path still. It might take 3 more minutes. It might take 5 more minutes because there is traffic or there's something else. So it's the exact same in your career. The moment you shift your thought process from a career path to a career map, where different places have different things which are beautiful and unique, you then completely reset. And if you are not growing, if you're not making the right decisions or too many quote unquote failures, same kind of failures, then people will value you lesser. If it's new kind of experiences, new kind of failures, you're keeping yourself abreast in your core thing and showing passion and showing that you've done some new axis, people will always value you. And if you have that curiosity and wanting to grow and stuff, you will never be out of date. Right? It's when you stop growing yourself, you take things for granted, you feel entitled because of your past experiences. Those are the times when you become unemployable or don't grow. And that really is the philosophical meta level answer to this. Because I can go next level detail on a variety of things that you asked, but really the moment this gets reframed and your financial expectation is reset on what you really need, you will be able to start up, you will be able to take that jump, and you will be able to have a beautiful journey through it. Right? There is no destination to all this.
Right.
And that's the whole point people are missing.
Absolutely. I think this map analogy is really nice. Next time somebody asks this question, I will definitely use this one. I will steal this one because I often, if people ask me this question, and a lot of people sometimes do, like, go to a startup, hey, move back, where will I be able to move back? I often do end up giving my own example because, like, right out of my college, I did a startup for 3-4 years, right? And then after that, I moved to Zomato. I was leading an engineering team. I joined as somebody who was leading an engineering team. I did not have to like go ISD 1, 2, 3, all of that journey again. Because somebody like Gunjan was the CTO, talked to me, figured out that, okay, there's this team which has to work on performance, reliability. Would you come build a team? You build a team. I know, you have done a startup already. So you have to build a team. But this team only works on tech. Your startup does everything. You have to do this. Right. Like, okay, fine, did that. I moved on to lead the mobile team as well. Then last few years it's been at SCALER. It's like, again, doing a lot of things not related to engineering, like sales, marketing, like this podcast is also probably bucketed into marketing only, right? To teaching classes, everything. And then all of the code that's in production for Scalers ecosystem and anything, I've never touched any of that. I've never worked with the tech team here. I just moved to, Geo, and here it's leading an engineering team again. I look at my peers. Like a lot of those people have gone through only an engineering path. This is the same place. I don't see just because I went to a different area of the map, I could not come to this area.
Absolutely. Back. And you will become a founder some point in time in the future. I can bet it today also. And sure. That's the thing, right? Yeah. And maybe that succeeds, maybe that doesn't. The problem is we put too many, these filters. Money maximization is success, or, having enough retirement money is the only success.
Those boxing it into a ladder and thinking that this rung I get off, can I get back on the next rung? Thinking of that way, it's very difficult to.
And different. And tomorrow maybe you get into product. You don't know. Tomorrow you become the CEO of some organization. And look at, for example, someone like Sam Altman, who runs OpenAI.
Yeah.
I mean, he was a founder. He got into YC. He ran YC.
Yeah.
He again became a founder. Something core technology he's building. So it's very different career paths. I think people are more open globally. I think in India it's happening.
It's happening, yeah. I'm seeing that happening, definitely.
And that's the thing. People, once they earn the money that they think is retirement, they'll realize that they still have to wake up every day and do something. Otherwise, just not that, they have something to do. So you'd rather just be intellectually honest and curious and decide your journeys based on the kind of impact you're creating, the people you want to work with, and something that you are passionate about.
Right. Thank you so much for all of the answers that you have very comprehensively answered, and I'm sure folks who are watching, especially engineers, are thinking about, should I start a startup? I think that's answered fairly well. And people who have decided that they want to start, what they want to do, I think that's also a lot of those things are answered. People who are in the stage where they want to start something, they don't know what. I think I can definitely recommend them some sort of residency program like you have there, for sure. I hope at least a few people who are watching this do take the plunge somewhere in the near future. That will be great because it's a great time to build.
And it's not just that, that's our hope too. And really the hope is that there's enough engineers. Not everyone should become a founder. We know that also. Yeah. But at least the people who have the joy of creation want to go do something of value and really move the country forward. See, at the end of the day, the only way, next 25 years, if you're hitting our 100th year of independence, we need a lot more engineers to come partner. There's a lot of business folks who want to go build stuff, right? So we need a way higher set of engineers who also are going to take that plunge. That ratio today is very skewed towards business. And in the next 5-10 years, we do hope through doing stuff like this with SCALER and a variety of other stuff that we do at Antler, we do hope that the number of engineers who are making this plunge is way more. And when they see that success, right? I mean, you have these success stories, right? Today you have Rahul Char, you have PhonePe, who has built a phenomenal platform. You have Amod Malvi of Udaan, who was ex-Flipkart, who has built a great platform. So there's a variety of these people who have made those jumps, and we just need hundreds more guided by some of these folks to make those jump. And I'm sure there'll be a great set of platforms, and people keep asking, right, when is the next Facebook and the Google coming out of India? You need hundreds more very strong tech folks to make those plunges, to then challenge and build some of those products from India, right? Not just be rappers and hacks and stuff, which is fun, but is not as much fun as building some scalable technology platforms.
Right. Thank you again.
Thanks for having me.